One of the really surprising earnings results so far in earnings season is from Garmin. This is not necessarily a company that you're going to think about as a high growth company or as a company that stock is up 100% in the past year, but that's exactly what Garmin is today. And I'm kicking myself a little bit because Garmin is a company that I interact with all the time. I wear a Garmin watch basically 24 hours a day. I think they've done a phenomenal job holding off competition from companies like Apple, Android, Samsung. They've really built a solid position as a go-to device for people that want a functional watch and a little bit of technology, but also need buttons and something that's very durable. And the surprise is this is now a phenomenal growth machine. So I want to dig into the numbers, where the company is seeing strength really across the board, but I'm going to dig into those a little bit deeper. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at the high level results first. This is the third quarter 2024 earnings results. You can see the consolidated revenue grew 24% to $1.59 billion. Gross margin, 60%. Operating margin, 27.6%. So we're seeing revenue growth. We're also seeing a ton of operating leverage for Garmin. I think that's really the key to take away from this earnings report. Here's the sales numbers. I'm going to go through these a little bit more when I go through the presentation, but you can see that growing across the board, aviation is the one weak point, but where I think you really want to see growth is in fitness and outdoor in particular, and those are doing extremely well. Auto OEM is another one that's an interesting point of strength for Garmin. They break things down into a number of different segments. Fitness is one that is doing extremely well. Revenue up 31% to $464 million. Operating income also $148 million. So things going really well here. Garmin Health is really the driver. And one of the interesting things, I think if you look at a product like the Apple Watch, they've really built that as a product that's built for health. But if you're really into health and you want all this information, Garmin is a really phenomenal option. And you're going to be able to just wear it 24 hours a day, get information about how well you sleep, stuff like that, that you can't do with an Apple Watch because it needs to be charged on a much more regular basis. I can wear my Garmin watch for weeks at a time if I'm not doing a long bike ride or a long run. Now, this year in 2024, they're expecting revenue to grow 27% in the fitness segment. Outdoor, there's going to be a lot of crossover between fitness and outdoor products because I look at something like the Fenix 8. That to me is more of a fitness product, but they're putting it in their outdoor segment. But revenue grew 21% to $527 million. Operating income, $209, 40% margin. Now, part of the reason that they can get that kind of margin is these products are extremely expensive. This is the Fenix 8. This is their Fenix E model. Fenix Solar, $1,100. Fenix 8 AM OLED, again, $1,100. You can spend even more than that. Bigger size is actually $1,200. So my Fenix watch is a few years old now, probably less than half of that price point. So that's one of the things that they're doing is pushing their prices higher in a lot of these products. Aviation up 3%. They're expecting that to be flat for the full year. If you're not aware, Garmin is actually a really common piece of aviation hardware, especially in smaller aircraft. So not necessarily something that we're going to see as passengers on large airlines, but if you fly in a smaller plane, you're very, very likely to see a Garmin device. So I think this is just kind of a steady as it goes business. Not the best operating margin at 22%, but profitable business, builds on a lot of the technology that they're building for their other products as well. And then Marine up 22%. Again, just like the aviation business, you may not associate Garmin with the marine business, but very, very popular devices in the boating world. And they're expecting revenue to be up 15% for the full year in the marine segment. Auto OEM, BMW is one of their big customers, launched a domain controller there, expecting this to grow 40% for the full year. That was up 53% in the most recent quarter, but still not profitable. Negative operating margin, what you see here. And really, really solid balance sheet. $3.5 billion in cash and securities, almost $20 million in free cash flow, very little in the way of capital expenditures, able to pay a huge dividend and buy back some stock. And management expects the momentum to continue. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the really impressive things about Garmin's business is they're going up against some of the biggest tech competitors in the world. Fitbit is now owned by Alphabet. Apple obviously makes the Apple Watch. And they have fought off those competitors to maintain a really, really good position in the watch market, even moving up to a little bit more high-end devices. Now, as this plays out, as those competitors get into the market, try to see if they can grow and take market share from a company like Garmin, I think what you're really seeing right now is a point of strength for Garmin. As they get more revenue, more leverage on their operations, they can make their products even better, include features that the Apple Watch maybe can't, maybe Fitbit isn't going to be adding. And you build this out much more like a platform, not quite a platform type product at this point because you're still accessing these platform devices like a smartphone. But also keep in mind that the competitors, that's not what they do. Alphabet does not make watches. That's not their first goal when they report earnings. That's not something they're typically talking about. Apple Watch is a nice product for them to have. It's maybe an important product for them to have, but it's also not the most important product. It's going to be behind the iPhone, the iPad, the Mac. Even products like AirPods are going to be more important for Apple's growth long term than the Apple Watch. So I think Garmin is in a really interesting position, got a lot of big competitors, and as we have more and more capability in these watches, it's going to be harder for new companies to enter the market, but their competitors aren't necessarily focusing on the watch market quite like Garmin is. And so as they've been able to push some of these prices higher, able to integrate with more and more third-party pieces of software, Garmin has built a really nice position in the market, particularly in that fitness and outdoor segment. And these are areas that I think are going to continue to grow. These are devices that last a long time, but they are devices that do need to be updated periodically. So we're maybe not going to have a 2 or 3 year update cycle like you would have with a typical smartphone, but maybe every 3, 4, 5 years you're going to get a new Garmin watch. And if that's $1,000 a piece at the high end of those devices, that's a phenomenal business to be a recurring revenue business. The other thing to look out for is more capabilities coming to these watches. As we move a lot of technology from a device like the smartphone to our wrist or to some sort of AI device that may be developed in the future, that connection may go to typical cellular towers, but Garmin also has devices that are going to be able to connect to satellites. So this is something that Garmin already has in the field today with some of their higher end products. They do have a two-way messaging product, but is that something that also comes to the watch? So you can go out for a run, not bring a smartphone with you, and be able to communicate with people. That would be the kind of thing, those are the kind of features that I think we're going to see Garmin adding in the future. So I think these are phenomenal results for Garmin. It's not the cheapest stock. Shares are trading for about 28 times earnings. And like I said, shares are up 100% in the past year. So a phenomenal run for Garmin, but it seems like everything is going incredibly well for their watch business, and I expect that momentum to continue. We'll see if they're able to take market share from some of these other bigger companies that have hardware in your pocket maybe already. But if Garmin doesn't need to rely on being on those platforms, that could be a great for them to break free and open up their market opportunity even more. But let me know what you think about Garmin stock in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.